Hi guys, how are you doing? This is Shakira Lanawaji, your tax resolution CPA. So today we're going to be talking about canceled debt and, canceled debt being looked as income by the IRS. So let's say you had a debt that was canceled a few years ago and all of a sudden, you did get a 1099-C and then all of a sudden, you got a letter a few months after from the IRS saying, oh, you didn't pay taxes on this. And guess what? Now you owe about $30,000 on a debt that was canceled. You couldn't afford to pay it to start with. Well, this is why it is. It's because whenever you have a lender cancel debt, you received something of value from that lender. And when you receive something of value, you weren't able to pay back on that amount that they gave you. That's something of value you received, but were not able to pay. That is viewed as income by the IRS. And as such, you have to pay taxes. It's taxable income. You have to pay taxes on that debt that was canceled. Granted, you weren't able to pay it is the reason why they wrote it off, but you do owe taxes on it because it's viewed as income to you, okay? So I'm going to tell you 3 situations where you have to opt in. You have to actively opt in on your tax return so that that debt that was canceled is not viewed as income, okay? The thing about it is if you don't know these laws, it's hard for you to take advantage of them. The first situation is where you were bankrupt at the time. Let's say you had filed bankruptcy in the year where that debt was canceled. They cannot collect taxes on that. But if you didn't opt in to say, this was bankruptcy and check the right boxes on your tax return, they're not going to know and therefore you're going to have to pay taxes on that. So the first situation is when you file bankruptcy. The second situation is when you were insolvent. Insolvency means you had more debt than you had assets. Everybody has debt. Student loan, car notes, mortgage, something. You had more debt than you had assets. And I like insolvency because it's not anything you have to go formally get from a bank and say, oh, I was insolvent, or a formal letter. No, it's at the time of the cancellation of the debt, you had more liabilities than you had assets, and that's it. So we've talked about bankruptcy, we've talked about insolvency. The last case is when you have a business property and you were making business income from that property and all of a sudden you cannot pay off the loan that was secured to be able to incur that income. So let's say you had a rental property. You had rental property and then all of a sudden, you were under on the mortgage, meaning the value of the property wasn't holding up and you had more debt, right? So they had to write off the debt, right? So when they wrote off that debt, it was a business property. Rental income is business, right? So that's another situation where if you opt in, they will exclude that debt that was written off from income, okay? So now, let me give you a case where this happened. I had a taxpayer. A lot of people don't even realize that when there's a short sale, which a short sale is when, like I explained right now, you own something and then the value of what you own, the value of the loan of what you own is higher than the actual value of that property. So this taxpayer had a short sale. The bank had to, do a short sale on him and he thought, it's a loss. I can't even, how is this income? Nobody really realizes that anything that was canceled or if you didn't pay up everything of value, it's income. Nobody thinks about that. He didn't even report the sale on his tax return. Not only did he not report the sale, he didn't opt in to have that sale excluded because it was rental property. So it does qualify for that exclusion. He didn't do that. He didn't even do the sale. He didn't show the sale on his tax return. So when he came to me, I was able to quickly do the opt-in for him. And then by doing that, he was able to save about $12,000 in taxes that he would have paid on that canceled debt. And I'm lucky, he's very lucky he was able to do that in time because they do have time restrictions for these also. And that was a slam dunk, right? But this is the lesson from this case. You don't know what you don't know. If you don't know the tax law, you can't represent yourself right. So you get this bill from the IRS saying you owe this much because you did A or B or C or didn't do A, B, or C. And if you don't know the tax law, how are you not going to be burdened with this debt if you didn't know how to get yourself out of it? This is why you need to contact a tax professional that deals with the IRS on a daily basis, right? And it's important for you to understand that if you have big events happening in your life, that's not the year for you to file your tax. If you have a sale, big events happening in your life that year, you want to make sure you have a good professional looking at your taxes to make sure they represent you and give you the best, tax scenario for that year. Okay. So if you found this video helpful, please like, share, or comment. And if you have any questions, private message me and I'll be happy to answer your questions. So I'll see you again next week and y'all have a great weekend. Bye.